Hi guys, this is Sayed. Today I'm going to explain about like an important accounting question. Okay, this is the most of the interviews they are going to ask for these questions. This is as per my experience. Okay, like the basic first they are asking for the entries. Okay, they are asking for so many entries, but you want to know about like a two three entries. It is the like a basic entries. You can see the first one, what is petty cash? I have to tell what is the petty cash. What is the purpose of using the petty cash? Petty cash na in petty cash எதுக்காக யூஸ் பண்றாங்க? The petty cash is a small amount of fund in the form of cash used for expense. அதாவது ஒரு சின்ன அமௌண்ட் தான் நம்ம வந்து பெட்டி கேஷ் யூஸ் பண்றோம். அந்த பெட்டி கேஷ்க்காக இது ஒரு சென்சிபிளே இல்ல. We are going to make the check, or we are going to, because we are going to make one check for the small amount. For example, 10 rupees. So we are going to make the check for the 10 rupees. We are going to take the signing for that check. We have to prepare that check. It is not sense. Okay, this is not a sense of work. Okay, that means what? So the small work we are going to use for the petty cash. Okay, that petty cash we have to pass on entry also. Whenever you are using the petty cash, for example, how petty cash will come? The petty cash means what? The petty cash we are going to use for the small amount, correct? The small expense we are going to use for petty cash. But even though the petty cash, the company will pay some amount to the petty cash person, he is going to keeping for that money. Whenever the small expense will happen, that petty cash, that accountant people on petty cash on separate guy will all, I think all the companies they have the separate person for the petty cash. So that guy will spend money for the company small expense, then he make entry. First entry we are going to see how petty cash will come into the company. That means what is the entry? The example, adding to petty cash account. That means what? The amount will cash will go to the petty cash account. Okay, that means what is the entry? The petty cash account is debited, cash account is credited. You can see we are receiving the petty cash. That is why the petty cash, the cash is coming into the company. So that means it is the debited. The cash is going. It is credited. Okay, we can see for the another entry like an example of petty cash accounting. For example, he is going to spend small amount like a petty cash amount. So what are the entries he is going to make? First entry we saw adding the petty cash. A cash adding the petty cash amount is coming to the petty cash person. So that means cash is coming in, correct? When we are going to spend the amount, the cash is go out. Okay. Petty cash used for the business expense during period. Okay. For example, whatever the business will happen, that time this petty cash we are going to use for the small expenses. Okay. For example, the postage, like a entertainment, like office supplies, stationaries, whatever the small urgent or small any expenses. So what are the entries? You can see postage or office, whatever it is we are going to spend expense, it is going for the debit, and cash is like a petty cash account is going for the credit of cash. The cash that guy spend money to purchasing or expensing some small amount for the office purpose. So this is the entry. And second one, see, they're asking what is the payable. The payable means what? The payable means simple. We have to pay money to amount to third party, like a company or as a bank. The whatever we borrow something to the suppliers or vendor or bank, so we have to pay like like they did for the service, or we received for the goods, we purchased the good from suppliers or vendors, or we took loan or something from the bank. So that means we have to make the payment to the those people, third parties, correct? This is the payable. Okay, the payable is the liability. This is the current liability, everybody knows about that. It's it's coming the balance sheet, it's appearing under the current liability. Okay, there's a basic things, whatever we are going to make the payment, so it is called payable, it's called liabilities. Okay, so what is the entry? For example, when we are going to purchasing the goods, what is the entry? The purchasing account is debit to the supplier or supplier name, whatever the accounts payable, accounts going for the credit. Okay. When we are going to make the payment, when we are going to make the payment, that time the supplier is going for the debit to cash or bank credit. You understand? When we are purchasing, the material is coming inside, the amount is going to the supplier. When we are going to make the payment, the supplier is like receiving the payment, it is going from our company, like accounts payable or bank, cash, whatever. Okay. See this with tax, how we are going to purchase the material, like with tax. Okay. For example, the goods purchasing, including 5 percentage tax. Okay, that is what is the entry. The purchase account is debited, tax input account is credited, to supplier account is sorry, purchase account is debited, cash tax input account is debited, to supplier account is credited. Like that means what? Purchase account and tax account, it is going for debit, to supplier account going for the credit. The payment is the same thing only. So whatever the original amount including the tax, we are going to make the payment entry, like a supplier account is debit, to cash or bank account is credit. This is the purchase entry, this is the payable entries. Okay. Then we are going sales. What is sales? The sales is nothing. Sales is like whatever we are selling or we are service to the, customers. So we have to collect it to them. We did some service or we sold some goods to them, the credit basis. Then we are going to take it from them. So that is like accounts receivable. That is called the sales. Also we did. Okay. Then the balance sheet, it is appearing under current assets. This is called under current assets. Okay, you understand? I think everybody is understanding for that. Like whatever we have to make the payment, that is for the what? That is for the payable. Whatever we are receiving the amount, so that is for receivable. Okay, you can see, for example, we see the including say January 1st 2022 ABC Limited sold chicken XYZ Limited credit to calculate amount of invoice including all expense and tax was 5,000 to be paid for on before January 31st 2020. Okay, XYZ Limited made full payment of 5,000 on January 25. Okay, what they are telling, the see this payment date is before 31st, they have to make the payment. Okay, but what happened, this customer, they paid before 31st, that means 21st 25th they paid already. So what is the receivable entry? When we are made the sale, what is the entry? The customer, the customer account, accounts receivable, customer account is debited, to sales account is credited. What is the full amount? 5,000. Okay, the second entry, the second entry, like when we are going to receive the payment from the customer, this is the entry. Cash account is or bank account is debited, to account receivable account is credited. Okay, that is a customer account. Okay, you can see this including VAT. If we sold some item to the supplier customers, what is the item? What is the entry? Like account receivable or customer name account is debited, to sales account is credited, to output VAT credited. Okay, this is the accounts uh, like a receivable. Okay, then next, what is the balance sheet? The balance sheet is the financial statement that is show the relationship between assets, liability, and shareholders equity of company the specific point of time. That means what? This balance sheet is showing for the company status. The the specific point, it is showing for the relation between what is the assets. how much assets we have this period, what is the liability, okay, what is the shareholders equities. So whatever we are going to see, it is helpful for the balance sheet. It's the financial statement. It is also called like the specific period only, not for the whole lifetime company, not like that. For example, they are going to make the balance sheet for this year, these things for this year only, okay. This is the simple things. Balance sheet always equal only, correct. The assets equal liability plus shareholders equity. That means what? For example, if I am going to start any business, it is whatever if whatever I'm going to shop on coffee shop, okay, that budget is 10,000, okay. So I don't have the 10,000, I have only 5,000. I am going to take loan from the bank 5,000. That means the liability plus shareholder equity both is 10,000. This 10,000 I am going to use only for that hotel. So whatever amount I spend, that is the asset for mine. So that means what? This liabilities, the shareholders amount, it is matched to the assets. That is the always it is equal. Otherwise your balance sheet is some problem which we have to recheck again. You can see the depreciation. So sometimes they are asking what is the depreciation. Depreciation is nothing. Depreciation is decreasing, like deducting, deducting, so like deducting value of assets, okay, or detecting, reducing value of assets, reducing in value of assets. That means what? Our assets value is it is going to reducing. For example, if you are going to purchase any vehicle, any car or bike, whatever, the today the showroom price is like a 1 lakh, okay. Tomorrow it is not a tomorrow if you are going to sell this product, you are not going to sell the same price because it is out of the showroom. If you are going to sell to anyone, he is going to reducing small amount, correct. Whatever if you are using, you are not using, after 2 years you are going to sell that vehicle or whatever, they are going to consider about that is a second hand, that is the old one, so they are going to take for reducing price. That means what? The depreciation, whatever the amount is reducing, that is the depreciation, okay. Now depreciation, how we are going to calculate, what is the formula? Depreciation equal to asset into rate of depreciation, okay. Depreciation what? Asset into rate of depreciation. If the interview they are asking what is the depreciation, you have to tell depreciation is reducing in value of assets, okay. It is reducing the value of assets. At the same time you have to tell that the depreciation, we are going to calculate asset into depreciation, rate of depreciation, okay. For example, you can see this example, like a plant and machinery they purchased 1 to 2001, purchased amount is, sorry, 1 to 2021, the purchase amount is 1 lakh, depreciation is 15 percentage as per government. That means what? We have to calculate depreciation equal to 1 lakh into 50 percentage, okay. Whatever amount will come, that is the depreciation amount, okay. So how we are going to make the entry for depreciation? So you are, for example, this is a plant and machinery, so you are going to make the entry depreciation account debit to plant and machinery account credit, okay. You understand? A depreciation account is debit to plant and machinery account credit, okay. This, for example, there is no plant and machinery like a buildings, like a whatever vehicles, whatever, so you can make like kind of entries. But you know this land is not depreciation. We are not going to depreciate the land because the land amount is not going to decrease, it is going to increase only. So that is why we are not depreciating for the land, okay. So you can see this accumulated depreciation. What is the accumulated depreciation? Accumulated depreciation is like accumulated means accumulated the sum. You can total all, for example the whole year, for example 10 different assets you have, okay. You can calculate the all assets depreciation, you can put it in the accumulated, okay. That means depreciation expense debited to accumulated depreciation is credited. In case if you are going to calculate only one assets like a 5 years accumulated, what you are going to do is the same thing, like accumulated, it is coming debited to plant and machinery. For example, you are calculating for the plant and machinery for the 5 years accumulated depreciation. You have to tell like that. In case your manager is asking what is the accumulated depreciation for like the 5 years for the plant and machinery, you are going to take the depreciation for the like first year, second year, third year. You have to calculate all the depreciations. Then it will come one bulk amount, correct? For example, it is per year is 10,000. It will come the 5 years 50,000. So you're going to tell this 50,000 is accumulated depreciation like that. Then what is profit and loss? What is profit and loss account? You can see this profit and loss account statement show revenue and expense during the specific period. This profit and loss account also we are going to make for the specific period. It will be show for our expense and revenue. So what we spend expense, what we get the money, income, revenue. Okay. Then we have to control. Okay, this much expense is going. Okay, we have to control these things. Okay, we are getting this much revenue. So how we are going to make more revenue? So it will be clear picture for the profit and loss account. So this financial report it will show for the revenue and like a expense. Okay, and I have to when next classes next video I'm going to upload like a profit and loss account, the full whatever the A to Z, the profit and loss account. You can see how many type of assets. If they are asking how many type of assets, you have to tell two type of assets. One is current, one is fixed. The current is nothing. The current assets are expert to convert easily convert the cash. If you need any cash, you have to convert easily. Like okay, within the 1 year period, like that. Including the product sold, cash resource consumed during regular business operation that are expected to the deliver a cash return with a year. See, cash within year, that means you can convert easily. Okay, the current assets are like what I am telling. If this, for example, the land you are not going to convert easily, correct? It will be taking so many process like that. If you easily, for example, the cash, you can see the current asset including the cash equivalent. Cash equivalent means the same thing. It is in the bank, correct? It is in the bank. Whenever you need, you can take. That is like a cash equivalent, account receivable, and inventory. Okay, this kind of things is current asset. The current assets like a short-term liability fund. It is day-by-day operation. Okay. The current assets also sometimes the short-term liabilities. Okay, like I am already explained about the petty cash. For example, the small things we are going to use for this day-by-day operations for the company. So we can use for this current assets. Okay. And then the fixed asset. Fixed asset is the physical items also. We can touch, we can feel it. Current asset we cannot feel it. Receivable, like these things we are not feel it. But current asset, fixed asset we can feel it. Like a properties, like a company purchase and use for the production is goods and service. Like that we can feel it. Okay, that is the long term asset. You can see the long-term assets useful life more than 1 year. It's the more than 1 year is the current asset. Fixed asset including property, plant, equipment are recorded on the balance sheet is the classification. Okay, that means what? You can touch. You cannot convert before 1 year the cash and you cannot. It will be like sorry. You can use more than 1 year this fixed assets and you can this is the physical things. Okay, you can touch easily and you can like that like a car, like a mission, like a bike, like a whatever the assets we have in the that is fixed assets. Okay, so what is the liability? The liability is like same like similar to the payable account. Okay, liability is we have to make payment to the third parties. That is the liability. So you can see liability can be either short or long. Liability is two types. One is short term and another one is long term. Short term liabilities cover debts and must be paid within coming 1 year. That means what? We have to make the payment before 1 year for whatever the things like suppliers, whatever it is coming for the liabilities. Okay, including interest payment on loan, because interest principal we are not going to make the payment, but interest every month we are going to make the payment. That is for the liability, not necessary in the principal amount. Okay, Monthly utility, for example, whatever you use for the telephone bill, whatever we are using for monthly, like monthly expenses, and short-term accounts payable. So that means we are going to make the payment to the suppliers for short terms. Okay, this kind of things is short-term liabilities. Long-term liabilities cover debts with a lifespan longer than 1 year. That means what? The more than 1 year, whatever it is coming, that is for the like liabilities. Okay, like example, it is mortgage, rent and property, the pensions, okay, auto loan, and other example that's paid over the course of multiple years. Okay, whatever we are going to make the payment for the multiple years, that is for the long term liability. You can see this what is gross profit, how to collect it. Okay, that means gross profit is also something referred to the gross income, is revenue minus cost of goods sold. It is correspondent to income the company the make after having uh, deducted all the cost associated with the making the product or providing the service. Okay, gross profit is nothing. Gross profit is like so whatever. See, for example, net sales minus cost of goods sold. That is the gross profit. It is trading account. It will come for the gross profit. Then this gross profit we are going to transfer to the profit and loss account. When we are going to then only we are going to make the profit and loss account. It's profit and loss. Okay, this gross profit where we are going to find out, it is from the trading account. So how we are going to find out? Net sales minus cost of goods sold. Okay, okay guys, thank you so much. I hope everybody is understanding for this important question in accounting. I'm going to prepare for the another important accounting questions also, the based on my experience. Thank you.